Joining us now with his perspective from CNN Center is Ron Hart with Morgan Stanley Smith Barney. Ron, good to see you. Thanks for coming in today.
Thanks for
Now,
having
the
me.
markets in Asia are going to be open in about an hour and a half from now. It'll be the first time the markets here will react to the S&P downgrade. What do you anticipate here in the Asia-Pac region?
Well, there'll be a little bit of a trade-off like there has been the last week or so. Most markets discount news like this ahead of time. They're very anticipatory in nature. The U.S. markets are all 7% in recent weeks or so. We basically see it maybe as more calm than most, perhaps, but time will tell.
Now, even though this is just one of the three major credit ratings agencies that have downgraded the long-term debt rating of the U.S., does this mean that it will affect interest rates on mortgages and car loans and things like that?
It could over time. Mostly rates are affected by supply and demand, and there's not a lot of demand for home loans right now in America. The other impact could be that Fannie Mae and Freddie Mac, which are a part of the U.S. government's credit, could be damaged a little bit, but it seems so far to be pretty benign. Rates are very low right now, historic lows, almost as low as they were in the 1960s. It's really the demand side for money that's causing the rates to stay low, not so much as the supply side.
It was such a roller coaster ride last week. We saw the sell-off in all the markets around the world, from Europe to Wall Street to Asia. And we also saw a lot of investors just cashing out, even in commodities, because of this uncertainty. So as we head into this week, what do you think it'll take for investors to get back into the markets?
We advise people not to react too quickly to things like this. The S&P 500 over a long period of time gets you 9% total return. The average retail or small investor gets around 3 to 4%. The reason that they do is because they pull out in times like this. They tend to react to news once it's already in the system. So patience is a virtue. It helps you in the long haul. Last year, the S&P 500 was up 12%. In 2009, it was up 24%. It can be a rocky ride, but over a long period of time, it serves the investors well.
Now, the Fed has its policy meeting on Tuesday, and the Federal Reserve is also having their annual meeting at Jackson Hole later on this month. There's a lot of chatter out there about another round of stimulus, what people are calling QE3. What's your view on this? Do you think the Fed will really go through with this? Is there an appetite for more liquidity in the market?
I'm not sure there's a political courage to do it anymore. The source of the situation right now in America is the Tea Party or the activists who want the deficits cut. And they were put a lot of pressure on Washington to do some things, and there was $2 trillion in cuts. S&P wanted $4 trillion in cuts. But the good news is we're having a discussion now, and there's pressure on government to reduce its spending. In the United States, we're borrowing 43 cents on every dollar we spend. That's unsustainable over time. So there's more pressure to cut and spend less than there is to spend more right now. So whether QE2 comes along or not, I'm not in a position to really say, but there's less appetite for it by the electorate.
As we head into another trading week, what's the bottom line? What are you telling your clients?
Patience. I mean, my clients are long-term investors. Morgan Stanley tells their clients to maintain a long-term perspective as they invest, and try to really, when things are down is really when you want to buy. There's a notion that, well, if things are down, let's get out. Historically, Warren Buffett bears it out. You want to buy when things are down, and when things are euphoric and everybody thinks things are great, it's a great time to sell. That, over a long period of time, serves you well.
Yes, it really does take the courageous investor, though, to jump into a market like this.
It does.
All right, Ron Hart with Morgan Stanley Smith Barney in Atlanta. Thanks so much. Great to talk to you.
Appreciate it. Thank you.